Sawa Daisy, basi tunajua kuna matako, tutolee picha basi.
Morning, everyone.
Yeah, colleagues, we want to start our lesson. I hope everyone has chosen the meeting. And I think you are prepared for the lesson. Okay, let's start.
Antimo, César. Ah,
Can you mute yourself? Can you mute yourself?
Yeah?
Please mute yourself.
Yeah, move yourself.
Lenea timo, mimi ke sa ta kwesi.
Mata kira.
amute na
Wenye magaidi mnaongea ujinga, nyamazeni ba.
Achane changalalio pagirnya. Team jinanga.
Ujinga ni wewe weli.
Wagale mwende mlale.
Kira.
Hii ni shida ya Waluya hii.
Kabla tu wanyamaze.
Miangala Kiswahili nyone liminyi. Piste bishina walone.
Agi je mwende lala.
mtu
Acha
naye wala
kelele.
mwazimat
How do you
Acha kelele bwana
keep
zangu.
quiet?
class. You can create your own meeting.
Wakali.
Wazenyu.
Watu wagirira mole.
Wakale
Acha kelele.
Baba bate batu chandira banta.
Nakuga mono. Janginya mama. Malenge nyinyi ona vichwa.
Je vikali bibi nabiko kwa no ke vikali.
Bate bakire kwa sababu ruga.
Hawa wenye wanaongea so mute themselves.
Kelele.
Wakisimu na kuanga na kierere, shida yenu ni gani?
Nako kushukuru
Ati wa
mabebi.
Kisii.
Ni problem.
Ati wa Kisii nakwambia makelele. Mm. Pande
Hello guys.
umeunmute. Ume- si mimi nimeunmute, nimemute. DM.
Everyone to keep quiet now. We start our lesson. Everybody to mute himself or herself.
I've said that someone, each and every one of you, mute yourself.
Acha ufala bana.
So now we are going to start a recap. And if you
And
cannot
Rono,
mute
Tumia
yourself, I will
akili.
leave with you circumponents.
Fala sana.
Last we were talking about
Excuse me, sir, before you continue.
public expenditure. I'm seeing someone who has not mute yourself.
Toka hapo mbio.
Ati public expenditure. Ayo urwale to bonga.
Guy.
Arwale to suno ga. Arwale to motu
Wakale no session.
Unapokuwa hiyo mfuta kwa maji.
I'm giving you a mute mic then.
Ano to bwate mago ga ina public expenditure. Expenditure mingi.
Ye komoy.
Bobo ingo na ya tara hivi.
Hey, guys. Hey. Now,
Oh. Public expenditure.
Anta yani wasare gireme tu yani.
Kana waziri taifa. Yangere kwa basario.
Alafu, oya, nauliza kitu moja. Maza
Mwache kupiga story hapa. Mwache kupiga story hapa nyinyi.
Masai
who is
hapo.
this talking?
Wajano wote join kwa test.
Hey, who is this talking?
Mate ato joining yako iwera bo.
Wewe mkujie ndo
Mkisi toka hapa.
Ramba boy, nyamaza wewe. Hey,
Maza jiongee.
look at this one.
Masaa hajui kujiunmute ama.
Hello. Hello.
Hiyo ndio yole sasa.
Oh.
Hello. Hello. Wewe toka hapa, unataka kutuambia nini? Nilikuwa tunataka kuangalia kama simu yangu iko sawa ama hapana. Hello.
Yo, good morning. Good morning, my people.
Morning.
Good morning. Morning too. Nitakuongea hapa.
Proceed. Order. Order. Can we start off the lesson? Are you ready? We start off.
Yes, we are ready.
Are you able to see my screen?
Yes.
What is written there? Kuna mtu aka anacheza na
Taxation.
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 Taxation. Taxes.
Taxation.
Okay. So we want to start off with the taxation. Language. Are you seeing my screen?
Yes.
Yes, sir. We
Yes.
are seeing
How do you are in
the screen.
Phoenix Hot 10? Gloria Isilo.
Taxation.
Are you sharing the screen?
Yes, yes.
Mkisumbua mtaopani.
Taxation.
Why am I not seeing this screen myself?
Taxation, sir. Open your eyes. Taxation.
Hello?
Wanileka ngali Kitale.
Are we ready to proceed?
Yeah, sure.
Thank you.
Yes,
Can
sir.
all of you mute?
Okay.
Yeah. So last time we were looking at program and performance-based budgeting system. And we did see why most governments use the program and performance-based budgeting systems. We saw the purpose. We saw the justification. And we did see the stages. We concluded the lesson by looking at the problems. Among the problems associated with the program and performance-based budgeting systems, we saw there was a problem of multiplicity where a given objective may be a target for more than one program. And we might also have a program that may be a target of very many objectives. And we look at this, you can see if they are constructing a given road, then that road has very many objectives. Apart from opening up, there are issues of economic growth and the like. Issues of quantification, where we cannot quantitatively measure some programs. You may not be able to quantify, especially in the service sector, what the quantity of the service that is being provided. Political systems are normally inflexible to some programs, and therefore we may not be able to quantify and therefore be flexible towards such activities. Analytical skills, people are trained, but we see their execution is a problem, and therefore limited skills do exist. Then in terms of the accounting system, we need those that are less aggregative for BPB program and performance-based budgeting system to be efficient. But more often than not, they are more aggregative. So if it's more aggregative, it means we are putting many things together, and therefore that means we shall have to spend more. That was program and performance-based budgeting systems. Today, I'll be submitting the notes on public finance that will be shared with you after the lecture. So we wish to start off by looking at taxation. We did see last time in our discussion that a tax is a very important component of public revenue. Any government must institute measures so that it collects money for purposes of meeting the functions. We had 4 functions: administrative, social, development, and protective. So for the government to meet those functions, then it has to generate funds and spend. We did see sources of finance, of revenue of the government, and taxation was one of them. We did see the principles that guide public expenditure. We saw the budget, how it can be used as a tool. So we wish to delve into the matters of taxation, and as we defined, a tax is a compulsory contribution, which means everybody must. So if it's compulsory, then everybody must pay. Why do we pay? We pay by putting it together so that we meet the expenses that are incurred for common cause. That we are paying, then what we have paid is pulled together, and the expenses made thereof are meant to be for a common cause. Implying that there are 2 main characteristics of a tax. It's compulsory. You must pay. So whether you name somebody Zakayo or not, you must pay. Recall from the times of Kibaki, you are to pay. Lipa kodi. And it doesn't mean that when you pay, you must get proportionate services. So there is no direct service upon payment of the tax. So to pay, you pay, yes, but you don't demand a direct service because we are putting together these resources. We are being imposed to compulsorily contribute, but for a common cause, which should be for all of us. Recall, we are all contributing to SHA, but is everybody benefiting from SHA? So it is for a common cause. This therefore means that despite that compulsory nature, then you have no right to demand for proportionate service rendered to you as an individual just because you are contributing. Therefore, the pulling together is important, that we put resources together into one basket, and then we expend from that basket. That is what this is all about. We want to see, as we do this, what is it that we need to do? What is it that is important in terms of taxation? We wish to look at what are the major types of taxes that exist. There are so many taxes, ladies and gentlemen. One is the income tax. As from the word income, this is what somebody earns, either from salaries, wages, allowances, out of employment. What you earn out of employment is income tax. What is out of business in terms of public limited companies? We call that one corporate tax. So this is the tax imposed on profits of public limited. When you talk of public limited government companies, these are mostly the government entities. Sales tax, on the other hand, this from the word sales, it is out of the sale of commodities. And who does the selling of commodities? These are businessmen and businesswomen. So if you engage in business, then what you pay is what we refer to as the sales tax. Excise tax, from excise, it means this is tax imposed on production of commodities. That we have production companies, we have production industries. They also pay out of their proceeds. And what they pay to the government is excise tax. Then we have what we refer to as the custom duty. Custom duty, in this sense, is nothing other than the tax that is imposed on the imports and the exports of commodities. So when you import, when you export, what you pay the duty you pay is part of the tax that the government uses. So the government has very many forms of taxes that they impose. But in a nutshell, what are the guiding principles towards any taxation? Because every country must impose tax. Its citizens must contribute. What are the guiding principles of this? There are basically 9. But the first 4 were what were given by somebody called Adam Smith, a great economist. And he classifies these 4 as the main one. The next 5 were derived out of these 4. So the first is the principle of equality. From something being equal, that's why we derive equality. That all the subjects of every state, all the citizens must contribute to the support of the government. So you and I must contribute to the government support in proportion to our respective abilities. So what does this mean? If you have more, then you should contribute more. If you have less, then you should contribute less. But the bottom line, as we said, that this being compulsory, it must be such that all of us contribute, however little it is. Therefore, the more you have, the more you ought to contribute, and this is mandatory to every citizen. The reason why we have various types of taxes, because we are giving this at various levels. Those who are employed pay income tax. Those who are engaged in business, production, they are paying the sales or corporate or excise, whatever the tax. So you pay at each level that you are involved in. Then the principle of certainty. What is certain? How much are you bound to pay? What do you ought to pay should be determined, or should have a clear way of determining the amount to pay. It's not arbitrary, meaning that a good tax system must be that which provides a proper way that individuals know how much to pay. Look at income tax that we are going to look at. How much is dependent on what's your gross, the totality of your earnings. If you earn more, you'll be taxed more. If you earn less, you'll be taxed less. Then the principle of convenience. What you are supposed to pay should be known and should be paid such that the timing and the method is convenient to you as the taxpayer. At what point do you pay? Is it convenient? We know that if you are paying, say, value-added tax on commodities, you are paying at the time of purchase of goods. You go to a supermarket, you buy a few items, then you read the receipt, you'll see they have written their value-added tax. We shall look at that briefly. So what is this that you are paying at the time of purchasing? The proceeds of the businessman will also be taxed for the sales tax. If you are employed by the government or even the private sector, you are paying income tax. So at what point do you pay? Income tax is taxed at the time of payment of salary. Sales tax is imposed at the time of purchasing commodities. Excise duty, it's imposed at the time of your exports or at the time of your import. So this is so convenient to you. And therefore, the regularity of the same payment is so convenient, and the method of payment is clear to the person who is supposed to pay the tax. Then number 4 is the principle of economy. What does this principle state? That every tax has a cost. For you to collect money, you spend money. So this principle says that the cost of collecting a tax should be as minimum as possible. If you are going to collect 10,000, then the cost of collecting that 10,000 should be less than the 10,000 itself. That's how you now generate money to be available as an income to the government, which it shall use, therefore, for other purposes. Meaning that the income tax must always exceed the cost of collection. But if you spend 10,000 to collect 5,000, then you are making a loss. And therefore, you will not be able to specifically generate funds for the purpose of the government to perform its functions that we looked at. For the purpose of the government to execute the principles of public expenditure that we did look at. The principle of surplus, the principle of maximum social benefit for those who forgot, the principle of authority sanction. Those were the principles that we did look at, and you need not to forget them because these are actually interrelated. So as we look at this, we want to be clear. These four were by Adam Smith. Now, the next five were derived from the four. First is productivity. Arising from the principle of economy, we have seen that the cost should be at bare minimum so that it generates funds. We should spend less than what we are collecting for us to collect the tax. That is the case. But with productivity, then we are saying that we should be able to yield more. We should generate the maximum possible. So if you collect 10,000 and you can spend 10 shillings to collect 10,000, that will be the best. That's when we say that it's a productive engagement. Meaning that the revenue should always provide sufficient funds for the government. So when it generates enough funds, then we shall work against the deficits. Many times you hear that the Kenya Revenue Authority has not met its target. Why? It has generated less than what it's anticipated. So if this is the case, what did we do? It is therefore not meeting this principle of productivity, because this principle states that we should always yield enough for the treasury to avoid deficit financing. Deficit financing, we now know. We saw a budget. We saw a balance of payment. When is it said to be in deficit? It means you are getting less than what you are spending. If in terms of the budget, you are spending more than what you had budgeted. That's what we refer to as deficit. Now, the principle of buoyancy. Buoyancy in itself means an ability of something to increase, inherent, that it should be automatic. That if there is any change in the income, for example, of an individual, the tax revenue arising from the income tax should definitely increase. That's the buoyancy principle. So this principle basically means that an increase in tax revenue should always be there, even if we don't change how many people, the base, are paying that tax. That we should have the ability to increase the income, even if we don't revise the tax rate or the coverage thereof. So if there are 100 people paying for this tax, there should be a tendency of that tax to increase without increasing the number from 100 to more than 100. That's the inherent ability of the tax system. So if there is an increase in 1 shilling to the income or in the price of the commodity, definitely that increase should be seen in terms of the tax amount that are generated to the government. That's the buoyancy. Then it should be flexible, meaning that the government should be able to revise the tax structure so that it suits its changing times of the economy. The government should be able to flex its muscles and say, let us increase this. Like we know all the tax on fuel, it used to be 8%. The government moved to 16% value addition tax. This should be at the government. that the income tax are now having the new tables, the new rates, the new structure, that this should be for the government. And therefore, the government needs to revise this depending on the changing requirements. It should provide an environment within which the authorities have the power to change. That's what flexibility is all about. The principle of simplicity. How do people understand? How many people understand? How easy is it for administration? That is simplicity. That a good tax system should be having those tax policies that are simple for people to understand and easy for the government to administer. I don't know how easy is it for us to understand the tax policies as presently constituted. I don't know how easy is it for the government to administer. I know the issue of administration is very easy for the government because these days you either pay through the government toll, e-citizen platform, 222. So the government is easy to administer that. But do people understand? I want to think that we don't understand. That's why we are always saying Zakayo mtoza ushuru and the taxes are so high, because we don't understand. But above all, there need to be different types of taxes so that we spread this tax burden to the different groups of society. So if you have, you should pay more. The less you have, the less tax you should pay. There are various types of taxes. So if you are engaged in each, then you should pay. That's how the tax burden is spread. This principle is called the principle of diversity. That we should ensure that every person contributes toward the government revenue by payment of tax through the various types of taxes and through the spreading of the burden to the different groups. If you are importing, not everybody imports. Steamer. Not charging. If you import, not everybody is importing. So you can do this. You can do this so that people don't suffer the same level, because we know people are different, their incomes are different, their activities are different, and therefore that principle of diversity should be able to spread that tax burden. The way we saw earlier in terms of the principle of equality, that we should contribute based on our respective abilities. So this principle of diversity expounds more on the principle of equality that we looked at earlier. So these are basically the principles. But now, when we talk of a good tax system or an ideal, then it should be that system that fulfills most of these principles. There are 9 in number. So we can evaluate our own tax system in Kenya. How many of these do we meet? So if we meet a majority of them, the maximum possible number, then we'll say that the Kenyan tax system is ideal. But if we meet a few, a handful, then we'll say that no, the Kenyan tax system is not ideal. So as we do that, as we look at this, we are looking at it in wholesome. How many of these principles do we meet? Find time, look through them, and evaluate our own country and see, do we have an ideal tax system? Some of you will be working with the Kenya Revenue Authority. We will be working in various ministries, various government departments. You will be engaged in this. So let us have an evaluation. In your groups, think, discuss. Does the Kenyan government meet those principles? Look at each and argue out. Does it meet equality? Does it meet diversity? Does it meet simplicity? Does it meet buoyancy? What have you? But on the general, it's known that, especially in Kenya, if you look at it, and like any other developing countries, the percentage proportion of the tax revenue in relation to gross domestic product, we looked at gross domestic product. What is produced and consumed locally? That's the gross domestic product. What is coming from agricultural production, mineral production, industrial production? What do we produce and consume locally? That's what forms the GDP, the total monetary value of goods and services produced and consumed within a country within a period of 1 year. So if you look at this, you realize that countries like Kenya, the percentage proportion of the tax revenue in relation to the GDP is lower. Why is this the case? Unlike in the developed countries, developed economies like in China, the USA, Britain, Germany, name them. Why is it the case? The reason for this is one, it's just because of the high tax rates. That in these less developed countries, there is high tax rates. Why high tax rates? They are high so that they raise more funds for the government. So in Kenya, we have high tax rates. Why? Because we intend to raise more funds for the government so that the government can perform those functions. Meaning that we have to be taxed heavily so as to generate more money. But as we are being heavily taxed, the individuals tend to resort to ways to evade paying taxes. Because you find that, why should I pay this tax 10,000 if I have a way out of paying half of it? This is only possible. People evade taxes for purposes of the existing loopholes. They want to pay less. So two things arise: tax avoidance and tax evasion. Tax avoidance is where you totally don't pay your tax obligation. Evasion, on the other hand, is where you are capitalizing on existing loopholes so that you pay what is not right for you to pay. You need to pay 10,000, you are paying 5,000 because you are capitalizing on certain existing loopholes coming in that tax system so that you pay less. So if we look at this, then most evading. So if they evade, what is causing them to evade is those high tax rates. And what is giving them an opportunity to evade is because of those shortfalls, the loopholes. And what are some of these loopholes? Number one, information gap in most levels. People are keeping inappropriate accounts, especially businesses. They are pretending so much. They are concealing factual evidence that you are running an electronic shop. So you display only the few items on the shelves in the front. But the real ones, you are hiding them behind the shelves. When a customer comes, he wants to pay to buy a 3 CD changer. I know these days, you people have a lot of money, but you don't enjoy life. During our days in the university, we were having CD changers, 3 CD changers for you to be a man. And when the lady comes and visits and sees you don't have even a radio in your room, count yourself, you have lost. But these days, I don't see. You people, I don't know what you enjoy life with your money. I don't know. So you go to that shop, you want a 3 CD changer, then it's not displayed. So when you ask, they say, yes, we have. Then they go behind the shelf, they bring. They are concealing is not in the records. This is what we are talking about. So they are pretending that they are running small businesses in order to pay less tax. Yet they are running millions in terms of the value of their businesses. How about the tax laws? We have seen that the principle of simplicity should allow how easy is it the government to administer? How simple is it for the people to understand? But in our country, there exist different and changing provisions for tax rebates. A rebate is only a discount or a waiver. Now, I talked about value-added tax. This issue of VAT changes through and through the process they are calling rationalization of commodities. We are producing sugar in Kenya, whether Nzoia or Mumias or whatever. We are packaging it here. Does it qualify to attract value-added tax? What value have we added? We are importing some commodities in their finished form. Do they qualify to have value-added tax? What value do we add for us to claim this tax? Those are the issues. So our laws are complicated. They are not that very easy because we don't know. I recall some time back, during Kibaki's time, Mwiraria was the CS, the minister then for finance. He awarded tax rebates to a company owned by a colleague, Njeru Ndwiga. What millions was it worth? Suppose they gave that to a production company like, say, Mumias then, or Nzoia, or Muhoroni, whatever it is. Could it not have made more a difference? That's food for thought. What makes us include value-added tax in the price of commodities? Which commodities should be inclusive for value-added tax? These are things that we rarely know. And therefore, they need for us to keenly look at this because it is providing us an opportunity. People or businessmen, those who are scrupulous, are adding this VAT on commodities that should not be. And they are remitting because the government knows that that does not apply. That is a source of opportunity for people to evade paying tax. How about the ownership? We know in Kenya, and you saw recently, Rigiji, if I can use Rigiji, because that's your person. The former deputy president, during his impeachment, we saw how he was using his son for KEMSA deals. We saw in the recent past how Ruto was using his own son. We have seen how Ruto is using his own daughter to run business errands in their names. But are they really the ones? Concealment of true ownership. I, Danikan Wasike, I'm the Vice Chancellor of Kibabi University. Milikon is doing work here, and they want to give me a kickback. I'll go and have the the name of Mwana was Mtoto, my aunt. I conceal and invest in his name or her name. That's what we are saying. So that even if they followed, it's not my child, it's not me, it's not my wife. But I have investment. I'm told the total amount of that time be what? They own estates outside this country. How did they get there? Expatriating our own little resources. I told you this course might be political, and if I touch on your person, please forgive me. It's for purposes of this class. That we have created a loophole whereby we are investing the property in other people's names. It's making it difficult for us to trace the source of funds for such an investment. Look at Baba. Where did the daughters get all this wealth from? She has never been employed. What is not happy person? How did they start this business they are running? How did she become to be what she is? Think about it. These are proceeds of investment in somebody's name. You will find that some of you, even in this class, you have very fat bank accounts. You've never worked. Where did that money come from? Somebody is wiring this money to your respective accounts. This is concealment of true ownership. Some of you own property. When did you buy? Where did you get the money? Concealment of true ownership. So if they are looking for Duncan Wasike, I pay and do all my taxes. But when they get to you, you even don't have an ID, but you have millions in your account. Where do they come from? This is what brings about another loophole, imperfect tax administration. That we are all human beings. And on that, those of you who don't know me, you can look at me properly now. I've put my image there. I look like very many people in this country. I look like Papa Charandula. I also look like Pius Muiro. I don't know if it's my father or mother who didn't tell me the whole truth. But because I'm told that it's the mother who knows the father of the child, I've asked my mother several times to tell me who my father is, and she has not told me.
Very true.
But we are looking at this because we want to understand.
You resemble Raila.
I resemble Raila.
Yeah.
Maybe, I don't know. Maybe my mother, you know, these ladies where they walk, brother.
No, at all.
That's where they walk. You never know. So if I am a human being, I'm amenable to temptations. And if I'm tempted,
you look like a Duoni.
Then I comply.
I think in my
then I forgive you.
Sir, you look like me.
I look like you. You might be my son or daughter.
You are exactly a Duoni.
So we are saying that this imperfect tax administration, I can conceal the true ownership, as we have said. I'm amenable to temptations. I can be corrupt.
Of course.
Corrupted. So, this issue of corruption, you come, you are supposed to do 1, 2, 3. I know I tell you I'm a tax officer that you are supposed to pay 10,000. So just give me 5, then I clear you. And you give me 5,000, I put in my pocket. That's corruption. That's an imperfect tax administration. Because some of these laws are too complicated for us to understand the way I've said. They are not that simple. Look at the case of Njeru Mwiga and Murare, the way I told you. These were the people from the mountains. And now they say, what ya Murima, what ya Murima. What ya Murima kitu gani? We have suffered under what ya Murima. We are suffering. let us be serious about this. Then, most interesting opportunity. If you pledge your loyalty, and you have seen this in all governments, we can start from Jomo Kenyatta, Arap Moi, Kibaki, Uhuru, and even now, the fifth, Ruto. If you pledge your loyalty to the president and the head of state, then you are given concessions. If you say, like if I quote, the then Kamoto, ni wewe tu baba. Ile kiatu nanulia mtoto natosha baba. Wajua wewe ni kiatu mzuri baba. Look at the likes of Oscar Sudi. You think that Ruto can whip them? No. They are pledging their loyalty. And most of these fellows, their accounts are not audited. They don't file returns. The donations to their political parties. How much do these people get from even non-government organizations? How about the non-government organizations themselves? Most of those who are stealing in the name of God, they say inakuja kwa wasiojiweza, but it lands in the market. What does that mean? We have all fallen short of his glory because we are wicked. Somebody say amen.
Amen. Amen. Amen.
Amina. Amina.
All of us have fallen short of his glory. So as you point a finger to Duncan, was, there are three other fingers who are pointing at you. Ukisumbua nitawamute. Ukisumbua nitawamute. Sawa. So these are things that are giving us problems. And we need to look at them. We need to look at it so that we change. So these are the 5 opportunities. These are the 5 loopholes that exist. But how do we go about healing them? Because we saw a good tax system must meet the maximum number, the maximum possible number of those principles of taxation. But we are not meeting them because of the high tax rates, which are bringing about tax avoidance and tax evasion. We are saying that tax evasion is illegal, a legal process. Avoidance is illegal. But as you evade to pay tax, you are capitalizing on existing shortfalls, the existing opportunities, which are now classified under as 5. Now, how do we go about this? How do we seal these loopholes? As we look at the solutions of this, look at what Kenya has done and what measures it has taken. That we need to have an appropriate conceptual definition of what income is and have proper tax laws. What do you mean when you talk about income? Is it your salary, wages? Is it inclusive of all allowances, or what is it? We must reduce tax incentives for tax evasion. How do we do this? We must put obstacles. What are some of the ways of putting obstacles? We can, 1, lower the tax rates. So if we lower the tax rates, people will earn more. And we know the more you earn, the more you have, the more you will spend. Now, the Keynesian economics say that all income that is received is either consumed or saved. When we look at that consumption aspect, you are consuming because you are spending. And when you spend, then you'll be paying more taxes. Remember diversity principle. There should be so many of those types of taxes, so that we spread that burden. So when you go to buy whatever you're buying, whatever you're spending on, you are paying more. So we lower the tax rates, people have more disposable income, and once they have more disposable income, they will spend more. And the more they spend, the more the tax they pay. Then we must supplement income tax, because kila kitu ni kwa income, kila kitu sha kwa income, sijui housing levy kwa income, nini kwa income. Why can't we supplement it with other forms of taxes? Like, we pay employees all their salaries without tax. Then we tax them as they spend. Why can't we also think of taxing them once in a year? That I work for 12 months. Then they take 1 month salary for tax. Why can't we think of that? That we can supplement income tax with other forms of taxes. These are ways to reduce incentives for tax evasion. That we need to have a comprehensive return on personal accounts. And this one has been done. You must file returns. Bora una kitambulisho na una hiyo number. You must file those returns. Whether you are employed or not, whether you are a student or not, whether you are a villager or not, you must. That's why we file those returns. We have done well on this. That compulsory auditing of accounts of high income taxpayers and assigning code numbers, we have done very well on this. During Kibaki's era. This is when the personal identification number came in, and it's now mandatory. With an ID card, you get the PIN number. For anything you transact, even applying for help loan, you must have a PIN number. That's a code number that has been assigned to you. And anything they do, they check that code number. We have done well on this. Now, how about donation to political parties? For us to seal this loophole, we must, at all costs, tax everything. Whether it's a donation to a political party, to an NGO, or whatever church, let us tax. In fact, let churches also pay tax. Tunawapea sadaka. Every Sunday, they have an income. Where do they not? Why don't they also pay tax for your sadaka? It's an income. Why are they exempted? Let them pay. Let those NGOs be taxed. Let the political parties be taxed on all that which they receive. Because they are using it in terms that these are donations for the poor, what, or I don't know what, for an NGO. And that's how they sneak in their private things. Then we are saying the penalty for tax evasion should be related to the tax saved rather than the income concealed. Make this more punitive. Triple the punishment. So that people know, once I evade and I'm found, I'll pay triple. If they do that on 2 people, we shall comply. Then there's this element of bracket creeping. Bracket creeping means during inflation, the prices of commodities increase. And therefore, by bracket creeping, it means we increase the incomes of the people to cushion them against the increase in prices. And the way we say it about the inherent ability of the tax revenue to increase with the national income, the buoyancy property, the buoyancy principle. So if you increase the national income, you increase the salaries of employees. Definitely the tax they pay also go up. So we can cushion them during inflation when prices have increased. We shall look at index numbers. When prices increase, we also increase the salaries. And as we do that, people will pay more taxes. And finally, we must always look at the tax brackets. Review them frequently. Review them regularly. So that we take care of this inflation, the price rise factor. If we do that, then we shall be doing the right thing. Those are some of the remedial measures. Look at them. As I said, as you evaluate to find out whether the Kenyan tax system is ideal or not. Also evaluate the measures to seal those loopholes. Discuss them and see what is it that the government has done? What is it that ought to be done? Perhaps you will understand what we need to do. So we proceed now and look at the income tax. We have been talking about income tax, income tax, income tax. Income tax is the earnings of an individual, that which somebody earns, the whole of it. What is coming from salaries, wages, commissions, interest on bonds, savings, dividends, all that which you receive is an income tax. But now, as we look at this, there are key terms that we need to understand about income tax. So, under income tax, we talk about gross income, the totality of what one earns. How do we do this? Total basic salary plus all the allowances gives you in gross income. A relief is a tax discount to an individual. So it can be given to you as a person or to a family, a relief. When you talk about taxable pay, this is what you are supposed to pay less contribution to schemes, registered schemes. So we have registered schemes like the pensions. You are not taxed now, but you will be taxed at the time of your retirement when you get the pension schemes. We have insurance policies. Certain insurance life covers that are provided are registered to the Commissioner for Income Tax. When you are contributing to such, you are not taxed now, but you will be taxed at the time you will be receiving the payment, the sum assured. So we must know how much do we tax today. What we are taxing today is what we refer to as taxable pay. Get this clearly because we are now getting into the calculation bit. Then we look at tax liability. Tax liability is basically what you are supposed to pay. What are you supposed to pay? So, in essence, is all that which you have received minus all that which you are supposed to pay at tax. That's what gives you the net of what you have to get. Tax liability, sorry, is how much tax are you going to pay? How much tax you pay is tax liability. So we get what tax are you to pay? Yes. The relief, because that relief is a tax discount that you are given. What are you supposed to pay and what's your relief? What is the discount? That gives you tax liability. Are we there, all of us? Now let's see what people are asking. Then we can proceed to answer. What is taxation? That's a compulsory tax. Taxation is the process, the entire system arising out of a tax, and we have defined a tax as a compulsory contribution that is imposed on individuals to meet the expenses which are incurred for common cause. Taxation is a process. After class, come on Atoa, we don't know that. I'm looking at, I forgive you, sir, for doing what? I have not wronged anybody. Hii topic gani pia mimi sijui. Baba ni mikora ya bondo. We don't care. Nasema ni ukweli, hatujui kama naongea ukweli, but for this class. Toa tu hiyo kamera nimeitoa. Freedom fighter, we don't know. Pius Mwiru, yes, I look like him. This mother walk along. Mothers walk along. I don't know. It's only your mother who knows your father is. In fact, studies show that 70% of those that they call father are not our fathers. They just take care of us. Mother, the one who knows the father of the child. I see Evans workers agreeing. Simple boy, yes. Only simple boy, we don't know. We are together in this. Even me, I resemble Adam Smith. Oh, very good, Samuel. Find out if your mother ever walked there. Let's stop talking recklessly. Yes. If you talk, that's your own. Me, I'm teaching. Let's make a moment of silence in fear women for 1 minute. Fear women, Bana. Those are dangerous commodities. Do you resemble my father? I might be your father. Find out. Dog resembles the late President Daniel Arap Moi. Ah, you know, Moi
The
was almost
commodities.
everywhere. That's why we used to have. But we did not ever see Moi boys. There is no Moi boys. Why were there Moi girls only? Because he was going for those principles. Hii lecture afike Kibabii University amepitia Garissa, Wajir, Kibabii comrades waseme sasa hii hata sijui. I began teaching at the university before you were born. That one I'm very sure of. All of you. When I was teaching in the university, you were not yet born. Indeed, there is a student of Kibabii who pretended to Auditor General in the office of CDF in Kandui. Is that good, sir? That's very wrong. Auditor General kitu gani? Hiyo ni pura kabisa. Wakumbusha tu sisi walitolewa. Sijafika hapo. Lakini sisi maniu bado tuko taingia na mlango ya nyuma. Bruce Romano is a good corrupt journalist. I don't want because I don't know him more. I talk only of those who naojua. Usifika hapo huyo ni I don't know. Ndio kaachana mambo za Mungu do. Yeah. Amujui Bible inamaanisha nini? No. Also gives you principles. Zakayo. Yes, we can get questions from the floor. Ben Musa, unmute and talk. Ben Musa. You are not talking. Ben Musa. Musa. Amepotea. Now, let us see this example. I want you to do this. Listen and listen carefully. You've seen that example. Miss Olive is a personnel manager with a certain company. She earns a basic salary of 26,000 per month, house allowance of 20,000, subsistence allowance of 2,500, responsibility of 4,000, car allowance of 8,000, medical allowance of 5,000. She contributes 10% of basic salary to a registered pension scheme, 320 to NHIF, which is now SHA, 200 to NSSF, 500 for service charge. In addition, she pays 1,000 to her cooperative society every month, and she has a personal relief of 1,056 per month. Calculate her gross income per month and for the year. Her monthly and yearly taxable income. Her monthly tax liability, a take-home package a month. Alipata. So, chukua kalamu na karatasi, tunaanza kazi. Hii mtafanya ndio nione kama mnapata kama wengine mnafanya tu vitu zenu. So the tax schedule provided is this. That between 1 and 10,800, 10%. Between 10,801 to 21,600, 15%. From 21,601 to 2,400, it's provided as such. Okay? So we want to look at this and now see we want to see how do we go about this. So gross income, how did we define gross income? This is the total income earned by an individual in a month or a year. It consists of basic income or basic salary and all allowances. So let us see. Calculate the gross income for the month. Put your hands on the chat box. So it's basic salary and all the allowances. Calculate and put your hands on the chat box. You have 2 minutes.
Wait.
I see people are getting 65,500. 81,950. I don't know how they are getting that. So, for the gross income, it is allowances. How do we get those allowances? Add basic salary 26,000 plus house allowance 20,000 plus subsistence allowance 2,500 plus responsibility allowance 4,000 plus car allowance 8,000 and medical allowance 5,000. If you do that, you get 65,500 per month. Then you are also asked to find per year. If you are earning 65,500 per month, multiply that by 12 to get the gross income per year. The gross income per year. So the answer there is 65,500 per month. And for the whole year, you multiply that by 12. Tuko pamoja? We go to number B.
Yes.
Monthly and yearly taxable income. How did we define taxable income? Taxable income, this is the gross income less contribution to registered schemes. The key thing is registered schemes. Gross income less registered schemes. So we go to the question. What are we told? She contributes 10% of basic salary to a registered pension scheme. So pension is registered. NHIF, we are not told. NSSF, we are not told. So how do we proceed? Get 10% of basic salary. So get 10% of 26,000. 10% of 26,000?
2,600.
2,000.
2,600.
Where? 2,600.
2,600.
So what is paid to the pension scheme is 2,600. So taxable income is gross income minus contribution to pension. The gross income we got per month was 65,500 minus 10% of 26,000, which gives you 2,600. The difference therefore gives you 2,900 per month. That's what taxable income per month. But you are asked, I want you to learn this so that you answer questions properly. Wanafunzi wanapata shida kujibu maswali. Umeulizwa hapa monthly and yearly taxable income. So we have done for monthly gross income minus pension because that's the registered one. So per month is 62,900. So per year we multiply that by 12. Are we together? So it gives you that 754,800. Wenye mnasumbua sasa, endelea story na watoto kulia tuone. Now let us go to the part C. The monthly tax liability. What did we define to be the tax liability? This is the actual amount of tax paid by an individual. It is obtained by taking the tax payable less the relief. What does this mean? We get the tax payable because subtract the relief. How do we get the tax payable? We go to this table, the tax schedule. We are told that up to 10,800, 10%. Up to 21,600, 15%. So we are supposed to apply this table. Wacha niongee na unaongea. Wewe msichana. Naongea unaongea. So we graduate this up to a maximum of 43,200. Then anything over and above that, we tax it at 30%. So let us look at the calculation. Now for number C, be very careful. We are talking of using the table. What we are to tax is 62,900 from B per month. So we are going to tax 62,900 using the table that we have. So in the first band, 1 shilling to 10,800, 10%. So for the first 10,800, tax 10%. The first 10,800, 10%. If you do that, 10% gives you 1,080. Apple. You make it bigger so that you can see. So for the first 10,000, 10%, 10,800, you are doing it 1,080. So what we have is a total of 62,900. So if you subtract 1080, you'll be left with 52,100. So we move to the table to the second band. So 10,801 to 21,600. So if you take 21,600 minus 10,800, you will get the second amount to tax. And that is 10,800. So for the next band of the next 10,800, we are taxing it at 15%. That gives us 1,620 as the tax to pay. Please, I'm moving slowly so that we move together. I'm moving slowly so that we move together. Now, of the 62,900 we have only taxed up to now, you can use the table. We have taxed up to 21,600. So we move to the next. How do I get the next amount? Take 32,400 minus 21,600. That gives you the next. So the next is that difference will give you 10,800. So the next 10,800 we tax it at 20%. Come to the table. So we are at the third level here. The next 10,800 at 20%. That gives you 2,160 as the tax. We have taxed up to 32,400. We have 65,000, 62,900. So we still have money. So we move to the next bracket. 43,200 minus 32,400. That gives you 10,800. So at 25%, we are going to tax 10,800 at 25% to give you 2,700. That's the tax. I'm explaining how we are getting all this. Now, up to that far, we go back to our table. We have taxed up to 43,200. We are supposed to tax. We are supposed to tax up to 62,900. So if you subtract, that's what we are going to tax from the table. Anything above 43,200, we tax it 30,000. So how do we get what is above? The excess. The excess gets 62,900 minus 43,200. That will give you the excess of 19,700. So that 19,700, tax it at 30%. The tax therefore will be 3,240. $3,240. Kama una calculator shauri yako. Now, we have taxed all the 62,900. What is the total tax the person is supposed to pay? If you add all this, it gives you 10,800. But from the way we defined, I go back, taxable pay, gross tax liability, the actual amount of tax paid by an individual. It's obtained by taking the tax payable less the relief. So what is the tax payable here? The tax payable is what the total you have gotten, 10,800. How much do you have for relief? So we subtract relief. We go to the question. You have a relief, personal relief of 1,056. So that personal relief, when you subtract, you are left with 9,744. That is the tax liability, the tax to be paid. That's the tax liability. I'm moving slowly. So this is how we calculate the tax liability of the person. So if you work out very well, this person will pay a tax of 9,744 as tax. That's for the month. If it was for the year, you multiply that by 12. You multiply that by 12. Take-home package is the net payment. So what are we going to do to get the net? We go back to the definitions. These are the key terms. Net income, the final amount received by an individual after all deductions have been made. It's also referred to as the take-home package. So net income is gross income minus all deductions. And all deductions start with the tax paid, contribution to registered schemes, and any other deduction. So doing this, our gross income, we got it to be 6,500. Now, less tax is the way we have calculated tax from our part C is 9,744. $9,744. Remember, we did calculation on pension. How much? 10% of basic salary. You got 2,600. Then we have those other deductions. NHIF, 320. Service charge, 200. Cooperative shares, 1,000. NSSF, 200. So if you add all this, it gives you 14,064 as the deductions. And therefore, gross income, 65,500 minus all deductions, 14,064 will give you a net salary of 51,436. $51,436. That's how to do the computation. Now let's see. Hapa naelewa vizuri, I don't know. Lakini kwa exam naona darkness, anza kutengeneza mtihani iko mbali. Hapo excess ni 59, 10, hapana. Check.
It's true, sir.
Yes.
It's 5910.
90.
Yeah?
It's 5910. When you take that percent, multiply by 9.
If you do?
Sir, that last band.
The last band.
Yeah.
The last band, the tax is?
5,910.
5,000?
910.
30% of?
Of 100 times
19,700.
Or you get?
5,910.
910.
Or 5,000?
910.
910. 10.
Yes.
And therefore, this one will be?
13,500.
13,470.
13,000?
470.
Okay, and therefore the net will be?
12,414.
minus 1,500?
12,414.
Wait a minute. 12?
What do I do correct?
414.
12 for 14?
Yes.
Yes.
Please confirm, I'll work it out.
Mathematics gone wrong.
13, 470.
Yes.
So what will be the total deductions? I'll still work out this to confirm. Work out this and get the correct figure. Now, example 2. Can you work out that? Then I want answers only. Gross income, taxable pay, tax charge, net income on the chat box.
Imeweza tu
income.
Can you look at this as an exercise? Then we can cross-check next week.
Yes.
Hello? Yes. Have this as an exercise, then we can cross-check next week.
Yes. Very nice.
Then we can adjourn unless there is a question.
Yes, sir. Thank you, sir, for the class.
Pardon? Class rep?
Hello.
Class rep?
Thank you,
Hello,
sir.
sir.
Thank you,
Do
sir.
you have that? You can
Thank you,
screenshot.
sir.
Hello, sir.
When you do it, you can discuss alongside the example
I've
2.
already done it now.
You have?
I've already done it.
Yes, but others are still consulting.
Yeah,
Okay,
we'll just need answers in the next lesson, but we've done it.
Naomba urudishe example 2, yes.
I have a question, sir.
Please ask.
Do you do the work individually in a group work?
This one is for your exercise. These are exercises. You can discuss with your colleagues.
Okay.
Yeah, this is just for.
Nice, sir. Understood.
Sawa, mtu ameuliza nirudishe example 2 ndio hiyo.
Your table, sir. Your table
What
attacks.
about
What about?
Nataka kuuliza mwingine akauliza.
Your table attacks here. Tax bracket table.
We are supposed
Yeah.
we are supposed to make the table ourselves by calculating all those incomes using the
Use
percentage.
the table I've given in example 1. Okay.
Thank you. Yes, can you show? Where is that table, sir? Where is that table?
Sasa unaweza turudisha hiyo nini hiyo table basi.
Yeah, your table.
Please, you can share the table so that we can.
Umesema tumia table ya watu waelewe bana. Watu
Tuna hiyo table.
Ningekuwa tu watu wanakubali, lakini najua nikisifanya tu hivi watapoteza wengi.
Excuse me, sir.
Yes, you are excused, Philip.
I have a concern.
Yes.
That if you send notes on the e-learning portal, try
Did I make a comment at the start of the lecture?
I request that you make it as a document so that we can bookmark or download.
Okay. I think I'm in the Odell office, and we are going to make that provision. Hey.
Excuse me, sir.
Yes.
Yes, I wanted you to share the table for the taxes because we don't have.
Oh, the table. Shall I add screenshots?
No. Think you can share it again also.
So let me go to where the table is. Where is the table?
Yeah, thank you, sir. That is it.
Well done. It is well done.
In future.
Yeah.
Thank you for the lesson. Enjoyable.
A good lecture.
We are done.
Thank you, Dr. Wasike, for this.
Right. Napate kama wewe dema alienda kwa
Can you the class back?
hebu kujiangalia. Ndio niko na rangi kwa yangu ni kwanga ni paka rangi.
Can end it.
Can we swing an action, sir, please? Can we swing another actions?
Can we?
Can we swing another actions?
Yeah, you can.
Okay.
To speak.
Nakutumia topic by topic. So I think we got to conclude the lesson.
Thank you, sir.
Okay, enjoy the weekend.
Yeah. Thank you.
Likewise, I enjoy the weekend.
It has been a nice lesson. Huh?
It's been a nice lesson, sir. Thanks.
See you later.
Ametoka mbio mbio.